Welcome back to Fast Market here on the TD Ameritrade Network. It's time for our cash tag segment, and for that we're going to bring in Landon Swan, the co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you, Tom. Good to be here. Thanks for having me.
All right, so we're talking Ralph Lauren. I got criticized here. I called it Ralph Lauren earlier, but it's Ralph Lauren, I guess. But Landon, if you look at the reaction in the stock over the last month, down at about 10% post-earnings, it was hitting 1.5-year highs ahead of that report. It seemed like everything was going well for this company, but we saw little cracks in here. Margins increased in this company on their last earnings report, but we're starting to see a pullback maybe in some of their costs and stuff. What kind of data do you guys have out of LikeFolio that might either support or push back against this move we're seeing?
Sure. So as you know, with LikeFolio, we're tracking consumer demand. So we can predict fairly well that top line revenue, or at least how many people are interested in buying. We have no insights into expenses. So that all, I'm glad it's out right now, right? So they gave us the insight that we need. So now I think we can paint the complete picture with the consumer demand side. And I will say the consumer demand side looks very, very strong. This company is it's firing on all cylinders as far as I'm concerned. You look at the purchase intent data, the web data, just general mentions, all of it is actually really strong, even happiness. And I think a lot of it has to do with just the quality of the product. They're also getting out there as far as marketing goes. You know, they're returning to Fashion Week for the first time in 4 years. I think they've got Ken wearing an $8,000 purple label jacket in the Barbie movie. That didn't hurt anything. And when we look at purchase intent, you can see it's on a nice uptrend, very steady uptrend. It's kind of on the lower side it's a higher low right now, but still moving on an uptrend line, which is of course what you want to see. We can actually see a stronger move in the web visits. If you look at just how many people are going to the website, it's up about 27% on a year-over-year basis, with huge spikes in January around holiday shopping season. So that's a very strong chart as well. And of course the mentions are also just showing us that they're ahead of Coach, they're ahead of Kate Spade, they're ahead of all their competition. Here you can see the web data that I was talking about. Very strong numbers here, up 27%. Again, we're on the sort of the downside of the cyclical clothing season, but still you want to be higher than you were last year, so very strong numbers out of this. Definitely bullish on this one, and I think that the stock reaction, yes, there was some concern with margins and whatnot, but I think a little bit of it is it just runs a little too fast, right? Here before I get into that, you can also see the just total mentions. People are talking about Ralph Lauren far more than other brands, far more than they were last year, and actually just doing really well on that on this chart as well. So higher than Coach, like I said, higher than Kate Spade and the others. I think though a lot of it had to do with the sell-off, had to do with just how well the stock had run. And as you guys know, stock runs really high, expectations are very high. Sometimes you can come out and beat on top and bottom, raise guidance, and it's possible to even sell off. That's not what happened here, but once you get to that certain level, investors are expecting perfection. That's priced in. So I think that this pullback is actually an opportunity long term. I do like where they're at right now. They don't have earnings coming up, but if they did, we'd be very bullish on those earnings, especially given the pullback that we're seeing here, which again, I see as an opportunity.
Landon, 1968, this company started. I know how old I was, and I'm pretty sure, based on my age, you weren't born yet in 1968, Landon. So this company has been doing this and that's just not normal in fashion in general, right? Brands get hot, brands get cold, but they've been consistently keeping it simple, a classic brand since, like I said, the late 60s. But I think what doesn't get a lot of headlines is this RLX brand that they have. It's kind of the athletic golf brand that they have. It's extremely high quality, and it sells. It's a popular brand, but I could say that about a bunch of polos brands. The thing I really like when you dig into this company, Landon, you find out that they don't, they discount a little, but they don't discount as much as other brands. And when you read about it, you find out they have $1.5 billion in cash and $1.1 billion in debt. which means they basically have no debt, right? And so that allows them not to have to discount. They can play the longer game with their stuff, and if they don't sell it this summer, guess what? They're probably going to sell it next summer when things happen. But so Landon, how unique, I guess my question to you is, in your data, how unique is a brand like Polo that they've been able to do this for as long as they have and stay as current as they still do?
Yeah, I think you make a good point here, because we see sort of these, ebbs and flows of fashion, and we see that, one brand can get hot and then cold, and, they come and go somewhat. But for them to stick around that long, what is that, 60 years? I mean, that's really impressive. And so they do it through, like you said, RLX, the innovations that they have, and just through their strong financial position. I think that's really important, is that they're not desperate to make things happen. They can just see what's out there, see what the opportunities are, attack where they need to, hold back if they have to. But I think that positions them in a way that many other retail or manufacturers, clothing manufacturers, just don't have. And so I do like their position. I think long term it's a very strong company. I love the fact that they basically have no debt. They've got more current assets than current liabilities. That's fantastic, by a tune of about $400 million. So that's always nice to have that cash in the bank. And like you said, it gives them that advantage of being able to pick their spots. And again, look at the price drop over the last little bit. I think this is oversold. I think it's an opportunity. If you like this company, this is your opportunity, in my mind, to get in over now or the next few days or weeks, maybe average in. But long term, I definitely like this company.
Landon, when you look at this company, I think demographics comes into play quite a bit. Are they making that transition according to your data, where the younger generation's getting back in here? Because this is, as Kevin mentioned, it started when he was young. And it seems like that demographic's getting older. I mean, I used to wear it all the time, but are they making the necessary changes according to your data to get into that, that younger demographic that's going to make them, relevant in the future?
Yeah, I think so. I talked about, getting into back into Fashion Week. They haven't been in 4 years. They've got a jacket into the Barbie movie. They've got Jennifer Lopez at the Met Gala wearing their stuff. So yeah, they're positioning themselves to be back and be one of the cool brands, right? And they have so many that I think that they can find that. But they're obviously putting celebrities and that sort of that fashion eyeball as a priority. And so anytime you see a company doing that, that they're trying to attract that younger demographic, which is obviously very important. Those are future customers. And so, yeah, I like where they're positioned. They're showing off that they know how to execute. They know what needs to be done as far as marketing and branding. So even though they're doing well now, I think they'll continue to do well as they pull in this younger demographic.
Classic, old school, preppy. I'm a big fan, and Kevin is, of course. He likes the RLX brand also. All right, great data, great stuff as always, Landon. Have a great day.
Thank you, guys. Take care.
All right, that's Landon Swan, co-founder at LikeFolio, breaking down the data for us on Ralph Lauren. Kevin, going into this, I mean, he makes it pretty clear just based on their data what they have and where the stock price has gone, down 10% in August. It might provide an opportunity. How do you want to look at this one from an example trade?